Hey everyone, welcome back to Corporate Decode, the place where we try to make sense of all the corporate mumbo jumbo so you don't have to. And today we're diving into a bit of a loan extension for TechPrecision Corporation. So what's the big news here? Well, it looks like TechPrecision had a loan that was about to expire at the end of August and they've gone ahead and extended it. This is pretty standard stuff for companies that need ongoing access to funds to keep things running smoothly. Now, TechPrecision is a company that deals in precision manufacturing, think components for various industries, and like most manufacturing outfits, they often rely on credit lines to manage their day-to-day operations, buy raw materials, and fund growth. The main event in this filing is all about a loan agreement. Specifically, it's about an amendment to an existing loan. TechPrecision's subsidiary, Rana Inc., along with some other affiliates, have this thing called a revolving line of credit loan with Berkshire Bank. This revolving line of credit, or as they call it, the revolver loan, has a current maximum amount of $4,500,000. Think of it like a credit card for businesses where they can borrow up to a certain limit, pay it back, and then borrow again. This agreement has been updated and restated a few times already, which is also pretty normal. It shows that both the company and the bank are actively managing this relationship over time. The really important part here is that this loan was scheduled to come to an end on August 29, 2025. That's very soon in the corporate world. If they hadn't extended it, they would have had to pay back that $4.5 million all at once or negotiate a new deal. So on August 28, just one day before the original deadline, they signed this 12th amendment. That's a lot of amendments, really showing how much this agreement has been tweaked. And the big outcome, this amendment pushes the loan's expiration date all the way out to January 16, 2026. This gives TechPrecision and its subsidiaries a lot more breathing room. Instead of having to worry about this loan in just a few days, they now have over 4 months to continue using these funds and plan for what comes next. It's also worth noting that the filing clarifies that besides this loan and business dealings, there isn't any other significant connection between TechPrecision's group and Berkshire Bank. This means the bank is providing a financial service based on the company's creditworthiness rather than some deeper strategic alliance. The actual document detailing this change, the 12th Amendment, is attached as an exhibit. This is the nitty-gritty legal text that spells out all the terms. And signing off on it all, we have Philip E. Podgorski, the Chief Financial Officer. That's his job, to make sure the company's finances are in order and that they have the capital they need. So what does this tell us about TechPrecision? Well, on the surface, it's a positive sign that they were able to renegotiate and extend this credit line. It means they likely demonstrated to Berkshire Bank that they are a reliable borrower and have a plan for their future cash flow. However, the fact that this extension was needed so close to the original deadline and with so many amendments could suggest that the company's financial situation might be a bit tight. Companies with very strong and stable financial health often secure longer-term extensions well in advance. This filing itself, a Form 8K, is for reporting current events that investors should know about. This loan extension is definitely one of those things. TechPrecision's common stock trades on the Nasdaq Capital Market. This tells us they are a publicly traded company, and these kinds of filings are important for transparency for all shareholders. My take on this is that while TechPrecision has secured continued access to funds, the need for such a recent extension on a significant credit line warrants a closer look at their overall financial health. Extending a loan is good, but understanding why it was needed and what the terms of the extension are is crucial. For investors, this filing highlights the importance of monitoring not just revenue and profits, but also a company's ability to manage its debt and secure necessary financing. It's a sign that they're managing their short-term liquidity needs, but it doesn't necessarily speak to long-term financial strength without more context from their more detailed financial reports. Alright, that's our quick decode of TechPrecision's latest filing. What are your thoughts on this loan extension and what it might mean for the company's future? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description for even more discussions and to connect with other finance enthusiasts. Thanks for watching and we'll see you on the next decode.